Ashwin, thank you for joining us today online. I felt really compelled that I should speak to you and have you share your knowledge and expertise with my friends about how to navigate this pandemic uncertainty. You know, pundits predicted crash, and you've maintained that it was a health crisis. It is a health crisis, not a financial crisis. And I personally know that had I listened to you, and if people had listened to you, we would have made upwards of 50%. So I'm really grateful for your time today. You know, to navigate these chaotic times, we need sure-footedness. My experience having invested with banks and remisiers have always left me feeling insecure, unsure, dependent, afraid, because I never understood what you have shared with me during our time investing together, with your proprietary algo, with your expertise, with your dark pool data, options data, knowing flows. I know what the big boys are doing. And so I've always felt assured. So I have a few questions, if you'll allow me. And, you know, the Fed action has created a divergence between the stock market and the real economy, something that has boggled my mind. I hope that later you'll shed some light on this. And coming from a very conservative background with my upbringing and being a person of my age, I'm not really familiar with decentralized finance and themes like hybrid cloud, blockchain, software, tech, telemedicine, and so on. So may I start by asking you, what is the difference in your approach to investing in the markets?
First of all, Tessie, I would really like to say thank you very much for having the confidence in us and to follow our advice. On 10th of March, when the stock market started dropping about 30%, everybody was panicking. The Federal Reserve came in and started printing 120 billion US dollars per month, what they call stimulus package. The moment that was announced, although all the other algos in the market, the machine-only algos, were shorting the market, okay, we thought otherwise. And that's where I talked to you. I said, this is a lifetime opportunity. Listen to us. And we started buying stocks for you from 23rd of March onwards. And today we are here. Those who would have listened to us and taken our advice would have made more than 50% in now 19 months. Even last night, the S&P went to a new record of 4266. Our target for next year, sorry, the S&P was at 4566 yesterday, and our target for next year is 5,000. And the NASDAQ closed above 15,002. Our target for next year is 16,000. So you can clearly see we don't just make empty predictions. Why? What makes us different from the rest of the market? Number one, all the algorithms in the market are machine only. Our success is due to our algorithm. It took us 5 years to develop, and it's 75% machine, 25% human genius. And after 5 years, we have achieved an accuracy ratio of 90%. We don't say we're never wrong, because we have no control over boardroom politics. We have no control over riots, over terrorism. We have no control of such things. But when we have a beautiful company that is performing like clockwork, we know the flow path and the price of that company over the next 12 months. That is the difference between us and the people out there.
And, you know, sometimes I've had to carry paper risk. And I know my friends have always warned me, oh no, you're underwater, you should take them out, you should cut your loss. But I've always heard you say, relax, be cool, because you can see what's coming in the future.
I like that question very much, Jessie. Let me clarify this. First of all, why do I always tell you don't worry? Because we are very sure of the quality of the asset we are buying. We only buy blue chips and nothing else. And we are very confident of what kind of asset we are buying. And this is the confidence that when it drops in price, we will buy more of it. Okay, we will get more greedy. Because, let me explain, markets do not move in one direction. Market moves in waves. Even the best stock in the market has got a 3 to 5% correction along the way until it achieves its target. So these kind of solid blue chips, do not be afraid. Because when we ask you to buy a particular asset, we have done the research, our algo has done the research already of what kind of asset it is. We understand the asset better than we understand our wife and our girlfriends. That is the kind of confidence we have. So that's why when the market drops, I tell you, don't be afraid. Buy more.
I can't help drawing the distinction between remisiers and how you do, because every time I make a couple of dollars, they'll say get out, and then it feels very much like in and out, quick scalping. And with you, it seems like we are more long term.
I'll explain why. We do not do scalping. We only focus on mega trends. We are here to help you make good money and, if possible, big money. Okay, good money, meaning not $2, $3. For our US stocks, we aim for at least 30 to 50 US dollars per share, nothing less than that. We do not do scalping. And our algo is designed to specifically spot out a mega trend. And look at Microsoft, for example. It has gone up 275% in 4 years. That is a mega trend. And I'm proud to say, our clients have enjoyed this return over the last 4 years. And they've been so thankful to us to say, because of you, because of your expertise, I've made this much money.
I've been delighted to be able to buy CFDs at much discounted prices. What makes someone qualify to get into those kind of deals?
CFD has been a boon for us over the last 2 years, because since August last year, we opened up to the retail investor. Now, the retail investor doesn't have a big money like the private investor between $3 and $5 million. He only has maybe 50 to 100,000 US dollars. And all this while, it was a very stumbling block that we couldn't cater to the retail investor and let him have some of the success as well we had with our private clients. And that was because the AAA stocks or the top quality blue chip stocks are not cheap in the US market, especially. So the blue chip, the private investor had the chance to make that kind of money, but the retail investor always was left behind.
Yeah.
And then we discovered CFDs. They've been around for a long time, but CFDs are like a knife. If you make beautiful food with a knife, you're fine. If you use a knife wrongly, it'll cut you. So because we know the price action of a stock over the next 12 months because of our algo, for example, we know that Apple will go to 225 per share next year. And now it's at 148. We know through our algo, it'll go to 225. That's a lot of money to be made. Now, the CFD gives us a chance to buy Apple at only $14.80 US per share, just 10%. Wouldn't you want to take advantage of this?
Yeah. So the banks are asking for between 3 to 5 million US dollars as a start point of committed capital. How much do you take?
We only, I'll come back to it in a minute.
Okay.
Now, or you buy Apple at $14.80. By next year, it will go to $22.50. Can you see?
Yeah.
By taking only $14.80 per share, so you spend about 1,480 for 100 shares, and next year it goes to $22.50. Means the man on the street now can make good money with just 50, 60,000, 100,000 US. Now, to make this possible for you and to make this real for you, it's not a pipe dream. We only charge a fee of 5,000 US per year to hold your hand 100% and to also do things for you. In case you're sleeping, we will do it for you so you don't miss the market. Now, you will ask me a question. Banks don't charge a fee and they do things for me, why do you charge a fee? Now, this is my question. This is my answer to you. Banks make money when you buy and sell. We do not make money. Brokerage fee. We don't make brokerage fee from you. So for 5,000 US dollars, what are you paying for? You are paying for our master platform, the HumanQuant algorithm system. 75% AI, 25% human genius, 90% accuracy. That's what you're paying for. And secondly, you're paying for our labor costs to do things for you and to make sure that you enjoy the success that we have enabled our private clients to enjoy.
It's been unprecedented for me, and I really thank you. That's why I feel so compelled to share this message with my associates and my friends. Now, here's the big question. How do you make money for 2022?
That's what today's video is about. And I'm very excited to reveal to everyone who's watching this video. Our algo mines data 24/7. It actually takes into account every single statement made by every player in the market. It takes these statements and it analyzes the statement and works out the consequences of the statement and what will happen in the next 3 months. Let me add, our algorithm look at yesterday's research. It looks at what's going to happen 3 months from now. What has already happened in the market is passé. We look at forward, okay? So our algo takes all this research and data mining 24 hours a day and makes up its own mind based on the human parameter, the human genius that we tweak it with. Don't forget, it's 75% machine, 25% human genius. When we tweak the human genius inside the algo, it will then take all this data and analyze this data and come out with top recommendations. For 2022, I'm proud to announce, our algo has come up with the top 10 stocks that are so good that they will give you 20% each per year, not only in 2022, but also beyond that. Meaning they can feed your family or your company a return of 20% per year, every year for the next 5 to 10 years.
So you're seeing these large companies, such good big names, provide yields that are ongoing, not just for 1 year.
Correct. So what our algo does, it analyzes these things, and we have our own criteria. These 10 companies that I'm talking about that our algo has picked, we are looking at strong companies with low or no debt. We're looking at companies with solid pipelines, healthy balance sheets. And these are companies who can go into the bond market and borrow at a very low cost. Why I have to mention this last point? Because don't forget, in 2022, funding costs are going to go up. In 2022, interest rates are going up because the Federal Reserve will start tapering and printing less money. When that happens, companies with low debt or no debt and companies who can afford higher borrowing costs and who can get money at still a considerably lower borrowing cost than a normal company, they will do well. A company that has high debt and high borrowing cost and has only got money to borrow at high rates will not do well. So there are criteria that we've fixed. These 10 companies are really insulated from higher borrowing cost.
So it sounds,
yes.
I'm sorry?
They have excellent balance sheets. These 10 companies, excellent balance sheets. They're insulated from higher borrowing costs. They have great products that fly off the shelves. And like I said, they can be bought and give you a return of 20% per company every year beyond 2022, which is really exciting. We have never done this on a retail scale before. We do this every year for our private clients. For the first time, we're opening up these 10 companies to our retail clients, not private clients.
Yes, and I'm grateful. I'm grateful for that. But you know, you've done such great work for me. For the 20% risk, you say that your accuracy is between 80 and 90%. For that bar of say 20% risk, how do you plan to mitigate that risk so that you balance that off? Because you can't escape risk, right?
Yes. First of all, like I explained previously just now, that markets do not move in one direction. Even the best stock will take time to go up.
Right.
So if we will first ask you a question: how much paper risk are you willing to take? Can you go to bed knowing that you're losing 20% on paper? On paper, not actual risk, not realized.
So we're talking about time then. We're not talking about money loss, but we're talking about time.
Yes. If you can wait 12 months and if you can afford 20% risk, it's ideal. But if you cannot wait 12 months, then it's not about the risk, it's about the time. So if you say I can only afford 10% paper risk, but I can wait 12 months, it is still possible, but you do lesser things.
Right.
I repeat, the best stock can drop between 5 and 10% a year. It can. But that doesn't mean the stock is going to crash. This is, I want to remove this misunderstanding in the market.
But then you've got a flow of, you say, more than a year. So we're quite steady, right?
Yes, I understand that.
Expectations.
I want to remove this misconception in the market. No matter how good the company, when a company drops 5 to 10% on a correction, let me tell investors that do not panic, because you have to understand first what you're buying. Okay, the best company will have a correction as well. Do not think that the stock is going to crash and be worthless just because it's dropped 5 to 10%. Do not do that. When you put in that fear, you make illogical and wrong decisions and you lose money.
Right.
Again, I repeat, the best company will still correct 5 to 10% a year. And when that happens, do not be afraid. Like Warren Buffett says, get greedy. Why you get greedy? Because that kind of company, you buy more of it. If Microsoft drops 10%, please, this is a free tip for everybody watching. If Microsoft drops 10%, please buy. Do not be afraid. This is what I'm talking about, because we understand exactly what we are buying and why we are buying. And that is not yesterday's research. That is tomorrow's research. Let me stress.
So it's tomorrow's research that your algo is tracking. It's your algo that's tracking names with small, what shall I say? Small loans, right? And you are able to get us deals called CFDs, and your fee is 5,000 per year for a committed capital of between 50 and 100,000 US dollars.
That's correct. Now, for investors who will taste our success and want to increase the capital, then we would have to have a different package for that. That's a private client package, and that is a higher fee package. But let me tell you, with that higher fee package, you can make up to 30 to 35% per trade per year. So more money, more performance. I mean, it's business.
All I can say is I'm grateful for your expertise. If the viewers out there are anything like me, I don't have 5 million US dollars to plant with a bank and then be treated as just another client. I'm now treated with a lot of personal time by Ashwin, and I'm learning so much. I feel a lot more in control of my financial investment decisions. So Ashwin, tell us how we can contact you, how we can work with you.
Before I tell you how you can contact me, I would add something very important. We always look at Warren Buffett as if he's an investment god. Let me tell everyone who's watching this video right now, you can be like Warren Buffett. If you have 100,000 US dollars, and if you can wait for 24 months minimum, I can make you feel like Warren Buffett. Today, our private clients who invest 3 to 5 million with us, they have so far made 65 to 80% with us since March 2020. They're like Warren Buffett, because everybody was panicking and jumping, the market's going to crash, and they sat down and smiled and make money. I repeat, if all of you, if any of you have got 100,000 US to spare and 24 months to wait, I can make you feel like Warren Buffett, and I can make you taste what Warren Buffett tastes, only in the bigger amount. Warren Buffett is not a genius. I'm sorry. I'm not putting him down, but Warren Buffett is not a genius. All he has is money, and all he has is time. If you have the same element, but in a smaller proportion, you can taste the same success. Now, to contact me, my email is ashwin@ppchk.net. And on WhatsApp, you can contact me at bit.ly/algotrader. On Telegram, we are contactable at bit.ly/algofactory. And if you want to see how credible we are and how good we are, please visit our YouTube channel, bit.ly/algowealth.
Thank you so much, Ashwin. Thank you very much. Be in touch.
Thank you very much, Tessie.